So after a very slow start to February, things finally picked up, and over the last 2 days, I've had about 4 trades triggered. Luckily, 3 of them have become winners, and one is, well, still fighting the good fight right now as I record this video. Now, 2 of those trades actually came on the same pair, and they came back to back in a method that we've talked about here on the channel before called the stop and reverse. And well, because you guys have expressed interest in seeing more of that in the past, I wanted to come in and show you that process today. So what I want to share with you today is a full walkthrough of that trade. The initial bullish trade, the reversal to the bearish trade, how the market gods spared me and were able to give me profit on both, and more important, a nice discussion that we had talking about when to and when to not, if those are the right words, use this method. Now, very important, I want to say a nice discussion that we had because the footage I'm going to show you comes from our live trading room. So although I do talk to myself on a regular basis while trading, the conversations I have in this footage I'm about to show you aren't with myself. They are actually with other people. By the way, if you ever want to join those other people and spend some time each day with a like-minded community of traders, join us in the live room. Open invitation. Just head over to www.tier1trading.com and check it out. All right, let's hop in. But I'll show you guys what I was looking at yesterday. So yesterday, we had price action rallying up in the morning, and we were coming to this previous level of structure right there. And I was eyeing up a counter trend trade, so a potential short there. Now, I'm not sure if I would have gotten enough room to actually get involved. It needed a very kind of perfect entry, but it was on my radar, right? Does that make sense? Price action at the time coming into structure, this is before it broke, coming in the structure, looking for a hold of structure and a return back down to this level, right? So that was the original kind of bearish idea. Again, I didn't take it too seriously because I don't think the risk reward would have worked out, but it was on the radar. So after that, price ended up breaking and closing above that level. So that was trade number 1. Price ended up breaking and closing above that level. So as soon as price action broke and closed above that level, do you think I was still on alert for that bearish trade at that level? Or did it go away? Yeah, it went away. Then the disappointing part happened. Price action came right back down, and I'm like, man, I called that prediction, even though it wouldn't have been a trade no matter what, right? But I'm like, I called that prediction. It came right back down. So as price came back down, I saw another opportunity, right? Because where did price come down to? And this one gets really interesting, and your data, depending on what data provider you have, it may not even be valid. But where did price come back down to? Specifically, if I kind of just like isolate this level, a previous level of structure, right? We came down to a previous level of structure, and despite what it may look like, we never got a lower low, lower close. We had a high momentum bearish candle. We had a strong bearish candle, not super strong, but strongish bearish candle, long tail to the upside, meaning the bulls tried to fight it back. And then the bears ended up pushing it down, although we did see some rejection at the bottom. We followed it up with another strong, weak, neutral. What would you call this last bearish candle? Strong, weak, neutral? Yeah, another strong bearish candle, right? So price action is running strong like Juggernaut from the X-Men into levels of structure. And then we got what? We got this, which is a doji candle. Doji candle is a sign of, putting you guys to the test right now, indecision. Someone other than Ali this time. Next, we got another doji candle, a smaller one, which is a sign of, we can't let you steal all the glory here. Yes, more indecision. And then we kind of died off in the afternoon, evening, as we typically do. And then right here, we finally got a higher high, higher close, right? Now, the interesting thing is we never actually broke and closed below the lows because we kept creating kind of these lows right here specifically. We kept creating more lows. So we got a higher high, higher close, right here, which was my entry into a move with the expectation that price would travel back up to here. Now, you can see price has not traveled back up to there, which makes me a little bit bitter, but it's still a decent trading opportunity. Now, as price action has taken a keel on this yo-yo, X to A, yeah, let me measure out the risk reward. Yeah, it's not, yeah, it wasn't bad, wasn't bad. The ATR is a little bit bigger than now I'm not going to say that. I want to say it's a little bit bigger than I thought it was, but it's not big at all. So again, entry right here. Nope, that's the wrong tool. Sorry about that, volume profile. Entry right here. Again, what you do is you take your ATR of your previous candle or your entry candle, previous candle to originally mark it up. You can see that the ATR is 11. You take the low of this candle right here, the one that gave us the higher high, higher close, because this is the lowest candle in kind of the whole formation. You can see on the right-hand side, it says my low is 136.31. I know that 136.31 minus 11 gives me a nice number of 20, right? And then looking at a risk reward up to here, right? So yeah, 2.3 to 1 again. For some reason, I thought it would be smaller, but it's not. It is small. It's 11, but I don't know. In my mind, I'm like, because it's such a good entry, I'm like, I'm going to be right down here, but I'm not complaining at all. So anyway, while this is going on, right, or not while this is going on, but what you can see now as the night has happened, we are now putting in, yeah, as Ali says, a nice bat pattern, right? So you've got an X to A to B, B to C, with a potential CD completion right up here. Do you guys notice anything about that 886? And I'm going to get this into our pro trade log while you type it in. 886 comes where targets were for the bull trade you just showed. Yeah. Yep. Precisely. And again, sorry, I'm trying to do two things at once, but I'm not really good at doing two things at once. There, yeah. So the bat pattern is at the completion point, or at the completion point of the bat pattern, I should say, is at the target level for my bullish trade. So what I am going to attempt to do here is that stop and reverse thing I have told you about, where I'm going to attempt to go directly from one trade, the bullish trade, not blink, keep my eyes open, and get directly into the next bearish trade, which should be fun. So wanted to share that with you guys because we've spoken about it in a few of the weekend trading edge videos, but it's actually a real life one that can actually happen, and it's kind of scary, but it's also kind of cool. It's kind of scary because, like, as soon as you get up there, obviously when you hit that target level, you're like, hey, I made profit, I'm happy. But then you go from being happy right back into another trade. And I don't know about you guys, but whenever I'm in a trade, I assume I'm going to lose, if that makes sense. Meaning, and I don't mean that in a negative way, like I'm bad, I'm a loser, but the poker reference of, like, once I bet on a trade, it's like the chips are in the table. I don't assume I'm going to get those chips back. Like, the risk is out there. So in these situations, it's hard because you don't really get to celebrate your win because you go right back on to, like, having that risk on. But if that risk wins, then, or that second trade wins, it's like, yeah, doubled my money. So it's kind of cool. It's a fun, exhilarating situation. Not that trading should be that way, but once you're mentally disciplined and psychologically sound, then you can allow yourself to be fun and exhilarate it because you know you're not going to make any mistakes. So with that being said, let me know if you have any questions about Dollar Canada, because I don't want to look at this, because as I stepped out, price action stopped going down and started going back up, and I don't want to jinx it. You guys remember yesterday we took a look at Dollar Canada, and we took a look at a stop and reverse trade. I told you kind of a deal where I originally was looking for shorts up here that violated structure, and I ended up getting long down here. And then it took us on the yo-yo of bouncing up about halfway to targets, then bouncing back down and me pulling out all my hair, but then moving back up. And then on the way back up, we had an advanced pattern formation that looked like this. And this was a perfect opportunity to do a stop and reverse. And we rallied up at the end of the session, making money, right? Hooray. And then if you guys run the chat in the afternoon, I came back and I said, hey, targets hit on dollar Canada, but the bat doesn't look too great, right? Whenever we violate that X leg, I assume bad things are going to happen. So it was funny. I went to bed. It kind of stalled out throughout the rest of the day, but I went to bed, right? Rolled my targets and everything, assuming that I was going to lose. I even wrote down in my trading log, right, the trade as being a loss, right? And then by some reason, I woke up this morning and I saw my position was gone. And I said, okay, well, I got stopped out. I have a one cancels other on. So when my stop is taken out, my target is taken out at the same time. So I woke up and there were no orders on the chart. So I'm like, all right, cool, stopped out. And then decided just to have a little bit of a look. And somehow I survived this trade. And there's only one reason that I survived. The market gods were on my side this time. Sometimes you have really good luck in the market. Sometimes you have really bad luck in the market. Today was one of those times where I survived by the skin of my teeth. There's no skin on your teeth. I don't understand where that saying comes from either. I'm writing a book on the sayings that I've been told that don't actually make sense when you get old enough to kind of think about it. But I don't know what the skin of your teeth means, but I was saved by that. So it ended up being a successful stop and reverse, a successful double. Rode this bad boy up, rode this bad boy down. Yeah, I'm going to get some bad karma at some point, unless this makes up for some other bad karma that I got in the past. But yeah, a cool stop and reverse there. I would say exhilarating, but it wasn't really because it happened while I was asleep and I assumed that I lost, so there was no emotional excitement. But in hindsight, exhilarating. So just wanted to share that with you since we spoke about it over the last, 2 days or so, yesterday. I forget if we talked about the day before or not, but yeah, it worked out. Hooray. All right, that's it on Euro Yen. Dollar Yen and Pound Yen are going to be this or similar. This is the best of the three, I would say. We can go to one of those next, but I do think someone had a question about Ethereum. Can you explain the stop and reverse process on the Ethereum Gartley chart, which I posted in the main chat? Yeah, so at a stop and reverse, you basically flip your position. You go directly from one entry or one direction to another entry. All right, let's look at Ethereum real quick. Do I still have you on here? I do not. Well, ETH, right? ETH USD. Yep, there we go. All right, so let's look at this potential Gartley. So what you would do for a stop and reverse, and then there was another question that came through as well, I think, so I'll go back and answer that. So what you would do in a stop and reverse is this. So your Gartley entry is right here. So let's say you were long here for whatever reason you were long, right? And let's say you were wrong 1 unit. Is that okay, guys? Just use 1 unit. 1 unit could be whatever your unit size is. Mini lot, standard lot, micro lot, whatever. You're long 1 unit. Does that make sense? You're long one thing. Give me a yes before I move on. Yep. So you're long 1 unit for whatever reason you were long here. And in a stop and reverse, pretty much your target for this bullish trade happens to be at the entry level for your bearish trade, which in this case is the Gartley. So normally in a Gartley pattern, if you were to trade this, what size would you trade? Well, you would trade 1 unit, right? If you were just trading the Gartley in its own right, you would trade 1 unit, which is your normal position size, correct? And again, give me a yes just to make sure this makes sense before we move on. Yep. And then 1 unit would put you would put you short. In a stop and reverse, because you're already, well, let me ask this as well. So going back to the bullish trade, if you are buying 1 unit, in order to get out of that 1 unit to take targets, what would you need to do? You need to sell 1 unit, right? So what you would do in a stop and reverse is this. You would sell 2 units at this level, right? And the reason you would sell 2 units at this level is because selling 1 would give you profit from your long trade, right? Your long trade, that would give you profit from that long trade. If I can get my money face over here, there we go. Come on, money face, what are you doing? Doesn't want me to make money, here we go. And then selling another would put you short 1 unit in the bearish direction. Does that make sense, guys? So you would sell 2, and what it would do is it would take you out of your bullish trade for profit and then put you directly in your bearish trade at your normal position size. So you're going from one direction, hitting a U-turn pretty much, and going in the opposite direction. Does that make sense, Devin? Where would you put your stop loss when going long from the bottom? Whatever the trade requires. So your stop loss is already there from whatever your trade is. If we don't have a trade here, but if we did have a trade here, it'd be below structure. So maybe this makes it better. This is an individual trade. This is an individual trade. The 2 trades have nothing to do with each other. Does that make sense? You're not trading this because you want to stop and reverse. This is an individual trade based on whatever individual reasons you decided to enter the trade. So it has its individual stop loss based on whatever the trade is. The Gartley is an individual trade based off of it being an individual reason, a Gartley. So the Gartley has a stop loss independently based on the Gartley. These trades have nothing to do with each other. I hope that makes sense. But if you were trading, let's say, a double bottom down here, let's say your entry was a double bottom, then you would trade it the same way you normally do a double bottom. So you look at your double bottom, you'd go an ATR below the lows, get your stop loss there, and then that's how you would enter that double bottom. But do you understand that a long entry here would have nothing to do with the Gartley? Is that crystal? I just want to make sure that's crystal clear. Okay, just making sure. I want to make sure that you guys understand these are 2 completely separate trades. Like you're not getting long in anticipation of the Gartley, because that's a whole different thing that will get you into a lot of trouble. Also, do you have a criteria on when you would use a stop and reverse method? Why not use them in every circumstance? All right. So let's go back to this question. Who can tell me why? Let's go back to the Canada trade because that's an actual trading opportunity. Who can tell me why I use the stop and reverse here on dollar Canada? What was the main reason I used the stop and reverse? Because I wanted to get short. The short for the Gartley was at the exact same location as the target for my structure-based trade. Right? You guys follow me? So that's the reason. Let's say this wasn't a Gartley. And let's say we're doing something like this. And I have my double bottom right here. Right? And I'm buying up from this level. Would you guys be placing aggressive limit orders right here for sells? What do you guys think? So you're buying a trend continuation trade. Would anyone here be putting just a limit order? And if you're an aggressive trader, there's nothing wrong with doing it. But would any of you guys be putting a limit order right here? If not, why not? So this is why you wouldn't want to use a stop and reverse on every trade, because if you're not looking to put an aggressive limit order right here, the stop and reverse wouldn't make sense, because what a stop and reverse is an aggressive limit order right there. So it only makes sense to use at a place where you plan on using an aggressive limit order to get short. So that's why you don't want to use it on every trade, unless your strategy says, hey, I put aggressive limit order at every level of structure, then you would have it on every trade, because that's your entry method. Make things clear or no? I don't feel like it did, but let me know. I do want to make sure this is clear. No, that's not an answer. What can I clear up for you? I think you're making the stop and reverse more than it is. I think you're looking at it, but you're not looking at the reason for it. So the stop and reverse is only used, right, when you want to go directly from a long position to a short position. Understood? Meaning I want to go directly from my double bottom right here to a short position right here, right? So I would ask you this question. If you were looking at this level for a structure-based trade, what would your reason for entry here be? Or what do you think your reason for entry would be? You could, like, what would you see yourself as a trader doing? Would it be aggressive limit order? Would it be lower low, lower close? Would it be double top? Which of those do you think you would use to get short at this level of structure? Double top. Okay. So in entering a double top, are you using a limit order or are you waiting for your double top? You're waiting for your double top, right? So thinking like that, would it make sense to do a stop and reverse, which would mean an aggressive limit order at this level? Well, it wouldn't, because that's not your reason for entry. Yeah, so do you see how that's why it wouldn't make sense on every trade? Yeah. Because now you're just saying aggressive sell limit order at that level versus waiting for, like, my reason for entry is a double top. So that's why you wouldn't want to use it on every trade. You would only want to use it on a trade where you want to get in right away aggressively. So the reason I used it with dollar Canada is because the reason for entry was a Gartley pattern. How do I enter Gartley patterns? Well, I enter advanced patterns with limit orders, right? Structured trades, I need 3-bar reversals, higher high, higher closes, double tops, double bottoms. For advanced pattern formations, ciphers, bats, Gartleys, I put a limit order. So this was a situation where I wanted to get in aggressively because that's my entry reason for those particular patterns. So therefore, it made sense to go from one directly to the other. But if you're not if it's just a regular trade and you need something like a double top or double bottom, if you were to stop and reverse and get in aggressively, that would mean that you're not waiting for your reason for entry, meaning that you're getting in a trade prematurely or without proof of I won't say proof, but without more evidence that the trade is likely to go in your direction. So I wouldn't waste any time thinking about the stop and reverse, Devin, to be honest with you. It's something that is extremely rare. It's not a trading method. It's not a trading strategy. It's just a cool way to say I'm going directly from one direction to another direction. That's all it is. Yeah. But I wouldn't waste any energy on it because in my opinion, it would be a waste of time. Just because it's so rare that you would actually use it or have to use it. Only when two trading opportunities occur back to back at the exact location, which is not very often. Not very often. So, but great questions though. Hope you enjoyed the vid. Again, if you ever want to join us in the live room, feel free. Open invitation, www.tier1trading.com. And for all you guys that have questions about trading setups and trading computers and monitors and all that stuff, here is a free link where you can download a buyer's and builder's guide so you can have all those questions answered. All right, until next time, plan your trade, trade your plan. Take care.